yo, yo, welcome to the show.
Yo YouTube, what is good? It's a Saturday afternoon and we're gonna talk about the Roth IRA. If you haven't already guessed it, it's gonna be on the Roth IRA. I do these videos usually once a month-ish. If you want to see that, definitely like and subscribe. You'll see my videos. And this one's kind of special. Why is it special? It's not because I'm sick, if you can't tell from my voice, but it's special because we started this Roth IRA in Robinhood roughly 1 year ago. So it's like a special 1 year update. Definitely pleased with the results so far. If this continues year over year, I will be pretty comfortable, pretty happy in retirement. Of course, we're not expecting all the 1 year updates to be this good, but let's just see what it is. It's not a planned video, as in like kind of improv. Like I don't have a list of points or whatever. Just gonna go over the portfolio, just whatever, talk about whatever I want. So it's up on the day. It's a Saturday, like I said. It says we're up. I think this is the Friday stats. Like this was yesterday, so we're up 1.46% yesterday, zero point zero 0.01 after hours, 2.17 for the week. 1 month we're up 5.95%. 3 months we are up 10.5%. Year to date we're up 16.07%. 1 year, which should be roughly the same as the all time. Let's see, we're up 19.91. All time we're up 19.92. So we started, the exact date we started was on the 21st um of August. So somewhere around there would be like the official 1 year, or the official start date. So the big news again, we've maxed the Roth IRA, so that's kind of cool in my opinion. In 2 years, or in 1 year, one calendar year, we've maxed it twice, which means we contributed the 2023 max. After August 21st last year, we started, consistently depositing and buying stocks. Of course, did the 6,500 for 2023. I think I finished around March of last year, maybe late February. It was right around, right before taxes were like due. So probably a month or two before that. Then of course for 2024 already maxed it last week Monday, I want to say. So yeah, good stuff. In one calendar year, I've dropped $13,500 in this Roth IRA thing. Wow, crazy. Well, the results do speak for itself. I think I can say that. After 1 year of being invested, we're up 20%. I think that's pretty remarkable. That's fairly outstanding, and it wasn't even hard to do. We bought ETFs. Of course, Ford was one of these holdings. The only stock that I hold is, I guess, Vici is a stock. Yeah, Vici is a stock. It's a REIT, but it's a stock, right? It's a company. But Ford we have SCHD, SPMO, SPLG, and QQQM, Vici as well. And I'm gonna talk about each of these. Go over the options. Buying power, we're sitting at 12,000. What the hell am I saying? We're sitting at $1,213.23. And why do I have so much buying power in my Roth? Like my money should be working for me, right? It's not like I have gold. If I had Robinhood gold, then this would be pretty much ideal. If I have this sit here, it would kind of pay for itself in terms of the charge for gold, the subscription, and then the interest I'd be gaining from my buying power. But I'm not really interested in gold, honestly. It does make sense mathematically for me to do it, but just personally, I'm not really. It's not that enticing to me. I don't know why. Maybe it will be in a month. Maybe I'll think about it. Maybe something will click in my head, and I'm like, what am I doing? Obviously, I should be using Robinhood Gold with the amount of capital I'm working with. But for now, we're gonna pass. For options in the Roth IRA, I remember when I just started this, I was like, no, we're only gonna buy these ETFs, no options ever, unless maybe I made it to 100 shares in a particular ETF. At the time when I just started, SPY was my S&P 500 index, or SPY was the ticker I was buying, which 100 shares of SPY, we're looking at 40, 50. At this point, 55, 56 $100,000, and all in one position. That's gonna be probably decades for me. So I did. I guess I should wait until I get to the stocks to talk about that. But for options, we just have SPLG and Ford. We bought a Ford, really a leap. This expires in about maybe 10, maybe 9 months. For Ford, 1117 call. So far, we can look at this. So far, so good with this option. I bought it maybe a week ago, almost a week ago. Let's see what this thing says as soon as it loads. Bought on. It should usually does say the date you bought on. Or I guess I bought it on the 9th. Oh, I bought that long ago. Wow. Anyway, bought at 93. Currently, it's worth 137. So we're up like 47% in the position. Really not planning on selling this for now. Like 50% return in 2 weeks is definitely pretty good. But I really do want this to be a long term play. Like I see Ford, even if it pulls back again in the short term, I think Ford can push back in the 12s before my expiry. So I'm just gonna see how that goes. It's a $93 play. I mean, it's not gonna really hurt me in my Roth, I don't think. But just wanted to go over this position. I don't really have any targets I'm trying to aim for. Maybe an actual underlying price target, but in terms of percentage return, not really. Just gonna observe it. Kind of just want to forget about it and see how it's performing in like a month or so. SPLG is pretty much just another version of the SPY, and I just have a call option on them. Looking back, I probably should have just bought a SPY call since it would have had a lot more oomph, I think. But it was a little bit more expensive, but I think it's worth it. If I do have the conviction that the S&P 500 is going to go up or increase in the relative short term, I think this is a 1 month contract, 920. So yeah, a month. Probably 3.5 weeks at this point. But yeah, as I'm saying, if SPY had a 1% day, like SPY had a 1% day, I think my option would have done way better than a 31% increase for the day. You know what I mean? It just there's a lot more behind it for SPY. But anywho, I am comfortable with what I have. It's just one option. It's really just these small options to supplement whatever gains I might be getting from share price appreciation or dividends or maybe I guess from selling options too. So let's get into our stocks then. Looking at the stocks, we only have four holdings here. Two of them are stocks and four are ETFs. Five shares of Ford. That's not necessarily the first holding, but it's the top of the Robinhood list here. And this is an interesting one because pretty recently, like last night, I had 105 shares of Ford, but because I had sold an $11 call and Ford closed at I think it was 11.27, I had to give up my 100 shares one for $11 a share. So that's why I have so much buying power as well. The 1,230 whatever dollars, that's from me selling my Ford shares between last night and this morning, whenever the option was like exercised or whatever. So this is Ford. We have five shares. So I guess we're gonna start buying back Ford again. Hopefully, now I really wanted to pull back so that we can hopefully maybe get in under $11. Who knows? I'm fine buying at 11.27. It's still way cheaper than what we had in this first round of the wheel. So we're just wheeling in and out of Ford. We're just successfully doing the wheel. Maybe not successful this time because my average cost was 11.05 and I sold at 11, and my premium for that was only a $3 premium. So technically I had a $2 loss plus all the share price appreciation from Ford. Like that's $27 that I missed out on. But then my option that I have bought, like my leaps for Ford, is kind of also capturing that positive movement as well. It's like it's all everything's related, at least for Ford. But hey, 5 shares of Ford. I don't know why I had 105 shares to begin with. I think I just accidentally bought. I miscalculated when I was buying in bulks of like 5 and 10s and 15s when Ford had its disastrous earnings like a month ago. But anyways, moving on to the next position, we have SCHD, 43.22 shares. Let me change this to all time total. So SCHD we're up 5% or 8% in that position, 9% really, $292. Really love SCHD. Of course, the dividends we've been getting from this too definitely added to that share price return. Amazing. Probably at least 10% in total. Next, we have SPMO, 18.79 shares, 10%, 9.5% return. And Momentum ETF based on the S&P 500, I believe. Love it. SPLG sold out of SPY to buy into this ETF right here because it has a cheaper expense ratio, it has a cheaper stock price. So, in theory, I could make my way to 100 shares quicker and then sell against those 100 shares because that whole process gets kind of sped up with SPLG instead of SPY. But the drawback to that is I don't think the premiums are as juicy, and of course with the share price being like a ninth of the price, of course not. But just the is it the I don't know what the technical word or term I'm looking for is, but if it's like open interest or just I don't know. I'm not sure what the word is, but SPLG is a little bit harder to work with when you're doing options. But we have 60 and a half shares and we're up 4%. This is a little bit skewed because I just been selling out of some of my other positions, buying into SPLG and QQQM and SCHD. Like these, I don't know. I've been buying a lot of these commodities recently when I'm way up in the position, already way up in the position, so it's gonna bring my total return down if that makes the percentage wise down. That's the percentage wise view down, if that makes sense. QQQM, same idea as with QQ as with SPY, tracking the S&P 500. QQQ tracks the index. Invesco QQQ tracks the Nasdaq 100, and then QQQM is kind of like a cheaper stock price and expense ratio wise version of that. I've never really messed with QQQ options or QQQM options, but I would imagine it's a similar story like with SPLG and SPY. Finally, we have Vici here, and Vici is pretty cool because it's a REIT. We have realty income in the taxable. In the Roth IRA, I thought we would go something a little bit different, kind of diversify a little bit. Vici is, let me just read it here so I'm not babbling. Vici Properties Inc. is a real estate investment trust which owns, did I say trunk? Trust, which owns and acquires, can I read? Which owns, acquires, and develops gaming, hospitality, and entertainment properties. It operates through the following segments: real property business and golf course business. So whatever that means, that's what they do. So far so good in the position, 10.5% in the green, and yeah, it's a strong dividend payer as well. So we will continue just to buy these and reinvest the dividends and go forward with that. That's all the positions we have in the Roth IRA. None of them are recurring investments because I'm kind of maxed out on the Roth. I can't really contribute anything more. This I really want to go back into Ford to continue the wheel. So I'm not really looking at that. The only free money I have, I guess, is just hopefully my options premium will be available sometime soon. I can kind of rinse and repeat that, whether it's puts, calls, whatever. Can't do credit spreads in your Roth IRA, if you were wondering that. So looking at this view over here, I always like to see this view, pie chart view. Just shows everything kind of graphically. That's SPLG, QQQM, SCHD, SPMO, Vici, and then finally Ford. The only kind of issue I think I have with my positions now is just SPMO and QQQM. I feel like there is a lot of overlap there and room for consolidation, but I don't want to pull that trigger. Not sure. But we have four down here, just 5 shares. That will be built back up, so it's gonna eat up a lot larger of a chunk of that pie eventually. But that is the Roth IRA. Sort by equity, see what things are like. We're just 38 cents shy of 4,000 in the SPLG. QQQM not far behind. SCHD not far behind either, and then the rest of them are kind of lagging. That's all good. And then when Ford works its way back up, it's gonna be around 11. Let's say 1150, right? Yeah. That is the Roth IRA, guys. Thank you so much for watching. I will see. Oh wait, no. I need to do the dividends in my Roth. I'll do that as well. So sliding over here to the spreadsheet real quick. Looking at the August dividends, like I said earlier, I think we don't get paid in August, so it's just gonna be hashtag or ticker symbol none. And I don't know if this is an actual ticker symbol, so no, I'm not saying that I got paid dividends in August from ticker symbol none. I'm just saying I did not get payments. Imagine this is not here, just none, anyways, moving on to the monthly dividends. We got paid all these dividends or dividends in all these months. Green is 2023, so last year we started in August, but we weren't paid in August, so we started getting the first set of payments in September. It's that like $6, then October maybe like $2 something. December was a huge one. I mean, I was averaging like $2-3 between these 3 months, because November we don't even get anything. So when I saw that December $25 total payment, I'm like, whoa, this is crazy. And then I figured, I mean, all the special payments, end of year type of thing, bonuses, whatever. I think that's just how dividends work, or companies usually work with their dividends. I'm just gonna see how 2024 December works. But coming over here, January in the blue. Now we're at 2024 in the blue. Modest like $7-ish payment to start the year. Then March, I mean, look how crazy that was, like a $20 increase from what we got in December. April humbled us again, nothing in February or May or August. Then June, July, you can see the flow of things. Yeah, it's not really like a straight line, I guess, linear growth. It does definitely change from like year, from month to month, quarter to quarter, whatever. And that's partially me rebalancing the portfolio, and it's just how things is. SCHD, it pays a variable dividend. SPLG, SPY, all these things, they don't. Most of them don't have a set dividend. Cumulatively speaking, or looking at things, this is how the graph looks. Green again, 23. Never got paid anything until September, then a little bit in October, November, nothing, and then December, huge $25 sent us up to 32.52. 2024 or total is rolling, so this is 140 dot dot dot. But so far so good. I mean, 140. 8 months into the year, what's that? We're averaging like 140. It's 17. We're averaging like $17 ish, $17.50 per month. It's not bad. I mean, it's the Roth IRA. The dividends really don't mean a whole lot. We're not using them, or I guess we are using them, just buying back more shares, which it's like 6 of one, half dozen of the other type of thing. So far so good though. Definitely will expect to see that 1750 average monthly average, if I did the math right, go up, especially with like the fact that we're reshaping the portfolio, expecting a heavier December than what we're used to during the course of the year type of thing. Let's just see. But yeah, 140, and we have 4 months left. And then this one I wanted to show because it shows all the dividends I've ever received based on tickers. So the ones in green are what I currently own, and the ones in red I no longer own. So in total, you can use this as kind of like a history lesson almost. So I've ever had 10 at least dividend paying stocks slash ETFs in my Roth IRA. Four of them, QQQ, SPY, SPY-D, and VHT, I no longer own, but this shows the dividends that I received from them. VHT, I remember when I just started my Roth, I'm like, ooh, gotta be diversified, set it and forget it portfolio, gotta throw some healthcare in there. So I was like at work on Google, like trying to find the best healthcare ETF, and then of course this Vanguard thing pops up. Threw it into uh, the the routine, and no, I mean we've kind of changed our opinion. It's a little bit conservative. It's just not where it's not in line with where or what I want to be doing, where I want to be or what I want to be doing. What where I want to be or what I want to be doing at this point in my life. So got rid of VHT, and I'm really happy with the positions I have now. As you can see, the 6 Ford, QQQM, SCHD, SPLG, SPLG, SPMO, and Vici. And like I said as well, QQQ and SPMO, just kind of scratching my head a little bit of because I have both of those. But let's just ride it out for a month, see where my head's at, and see what I want to do. Of course, y'all can for sure leave your comments, and I read every single one of them, of course, and I do take everything into account. A shout out to that person who like highlighted the SP. What did I have? The SPYD and SCHD thing as doing. They're both great dividend paying ETFs. SCHD does have a lower yield than SPY-D. But I think I'm not gonna yield chase. I think SCHD is just a better overall investment, much better like dividend growth rate. Like that's really what matters. I think at the end of the day, it also has a longer track history, I believe, and SPYD, even though it has a higher dividend, like that's not all that matters at the end of the day. I don't think it grows as well either. So, and then SPY and QQQ, y'all know I already just dropped those into the favor of QQQM and SPLG. So, yeah, I just wanted to kind of break this up like that, show y'all. And then lastly, I wanted to come over to this site. This is trackyourdividends.com. This is what I kind of update every month to see how the portfolio is looking. This software does all the heavy lifting, or this website does the heavy lifting for me, so I don't really have to input data. Like it makes my life easy. So we got all these 6 holdings. This is a current accurate representation of my portfolio. This does not include the 1200 buying power I have. So imagine that's all gonna be dumped into Ford. Ford's gonna have 100 shares, gonna be yielding like $15 instead of $3 type of thing. Sorry, $60 instead of $3 type of thing. The yield's gonna go up. Yield on cost should go up as well. Income definitely gonna go up. The beta is just a measure, I think, of how your portfolio kind of compares with the market, the general markets. I'm not sure what a number lower than one is, like the sweet spot, the like equilibrium, I guess. Not sure what a number less than 1 suggests versus one that's greater than 1. I'm not sure. Don't really care, honestly. But yeah, this is the dividends we're expecting. Nothing in August. Those blank months, they still do bother me, but I haven't found a good stock or ETF, preferably ETF, to throw in there. So just gonna do. It is what it is. Not like I need my dividends from my Roth now or anything, so it doesn't really matter. Yeah, September expecting 22 roughly. October 51, and these October months, October, January, April, and July, should go up because I'm gonna be buying back into Ford. I'm not sure if I'm just gonna buy the shares or try to sell a put into it, get assigned on a put, on a sold put. I'm not sure, but of course you guys will be in the loop for that. So that should be the end of the portfolio. I'm not gonna really go over all these things up here, but that's the Roth IRA, guys. 1 year in, very happy with the results so far, and I do these once a month. So if you want to see them, like, subscribe. If you want to just watch my Roth IRA videos, I'll take it. I'll see you guys in the next one, more than likely this afternoon, where I talk about what I'll be buying inside the Roth IRA, inside the taxable brokerage account, and I changed things up a little bit. So you definitely want to watch this. I'm just investing a little bit more money this month. So yeah, let's see what I do with it. I'll see you guys in that video. Until next time, peace.